This is Shelly Craft coming to you live on SNN Live. We're at the LD Micro main event in Bel Air, California, 2014. I have with me Neil Cataldi, Blueprint Capital Management. Welcome to SNN Live.
Thanks, Shelly. Thanks for having me here.
It's good to have you. Give me a little rundown on what you do there.
Sure. So Blueprint Capital Management is a MicroCap focused RIA strategy that I started with a partner of mine 2 years ago. We're based in the Philadelphia area. It's a concentrated portfolio, 10 to 15 names, typically focused in the consumer and technology sectors of the market. We've been, our inception date was a little over 2 years ago, and been annualizing around 20% for the first 2 years.
You're perfect to ask some questions that I've been wanting to find out answers to from a professional in the microcap world.
Yeah.
What do you think about the microcap market 2014?
Sure. I think 2014 has been a little challenging for a lot of managers. 2013 was an exceptional year. We like to think that our benchmark is the Russell 2000. There's other smaller indices that we could look at, but the Russell had a great year in 2013. We saw a lot of takeouts. We saw a lot of companies double and triple. 2014, small caps have underperformed large caps. I think as a result of that, it's been much more of a stock picking environment. So a lot of managers we know have underperformed a little bit, and it's been a little more challenging. But ultimately, this is an uncorrelated, area of equities, right? That's why people should invest in the space. If you find the right manager, you find the right company, you can drive alpha in any market. And I think there's a real argument to be made that investors allocate at least a part of their portfolio to microcaps. So what we typically tell people is that 10 to 20% of their portfolio should be in this space. And the irony of it is that your average financial advisor isn't even looking at these companies, right? The broker at a major bank can't, typically recommend these securities. A lot of the larger institutions are playing in larger caps and mid caps. So we're staying away from a lot of the pitfalls and a lot of the sort of the areas that a lot of people have exposure to. And when you find good stocks and great companies early, you can have some really great outperformance.
I get it. I like it. I know our audience is appreciative of what you're talking about. Now let's look at something else. When you're building your portfolio, how do you calculate what you're going to put into that portfolio? What gets you to sell it? What gets you to buy it? Do you go sector to sector? How do you work it?
Sure. So our focus is on consumer and technology. A lot of sectors in the market, right? We could talk about energy. We could talk about biotech and pharma. We could talk about the financials. In our opinion, there's a lot of variables in those spaces that we can't control. So with biotech, I don't really want to I don't have an opinion on an FDA panel meeting. In the energy space, we've seen what's happened with commodity prices recently. It's just something that I don't want to try and predict, right? In the consumer and the technology spaces, I feel like I can get my hands around the business model better. So for us, that's where our focus is. In terms of portfolio construction, we like a concentrated portfolio. We think that when you find a really great company, you want to capitalize on that opportunity, right? So for us, 10 to 15 names over a portfolio gives us the concentration that we're comfortable with. But as far as sizing, we typically start out between like 5 and 10% of the portfolio. As a management team executes, we feel more comfortable, increasing the allocation. And it's something that you have to manage daily. It's something you have to stay on top of. These are small companies with typically very exciting, stories and risk-reward profiles, but they change rapidly, right? So, what we like are small companies that have a big brother relationship already. A company that has like an AT&T or a Verizon who's already sort of vouched for their product or service. They're comfortable with the business risk, in taking that product or service. Relationships like that give us a lot of comfort. They validate whatever the product or the service is. So that's something.
What are your criteria for rotation?
As far as buying and selling?
Yeah.
Yeah. Well, whenever we buy something, we have a thesis. So we're long-term investors. We are, typically the risk-reward profile with these companies is asymmetric. So we'll think that, if we're wrong, downside might be 25 to 50%. But what if we're right, it could be 3, 4, 500%. And that's what we're really looking for, because if we put, 10 or 15 of those in a portfolio, and our home runs are 3, 4, 500%. We can limit the downside with the losers. That's where the real alpha is generated.
So if there's a dog in the litter,
yeah, and there always is. It's hard. I mean, there always is. Yeah.
So if you have the ability to balance,
yeah,
on a monthly rotation, then is that kind of like a methodology? And I mean, you're probably on it every minute of every day.
We are. Yeah. I mean, you have to stay on top of it because it's concentrated, right? And the moves are 20, 30%. I mean, if you get a really positive announcement or a really positive earnings release, you're not seeing a 5% move like you might see in a large cap stock. You're seeing a 20 or 30% move. So the portfolio always needs a little rebalancing. Typically, we're buying on moves down, and we're maybe trying to capture the moves higher. Obviously, it's a balance. As far as the losers, I mean, what you need to do when you find these companies is find companies with really strong balance sheets. You want to find companies that don't need to raise capital. Management team is obviously incredibly important, and you're looking for those inflection points, and you're looking for, certain changes that are going to happen. So coming to a conference like this, somebody always asks us, how do you find your stocks? How do you find your ideas? And what's great about LD Micro is that it's probably the biggest event of the year, and as a result of that, not only do we get to see a lot of the companies that are already invested in here, but we get to see a lot of companies that haven't presented anywhere else. And typically what we found is that when a company comes to an event like this, it's because they have something to say. So, a subtlety, a nuance, if you will, is sort of watching the companies that come here for the first time. And I'm sure you know that. Yeah.
So I want to just get back and ask you one more question on, what's your price criteria for entry, and what's your limited or minimum amount of volume that you would consider a company to have?
And by price, you just mean price per share? Yeah. I mean, we don't invest in penny stocks, and we're typically looking for stocks that are trading on a major exchange. That's not to say there aren't exceptions. OTC will look at companies that have an uplist in their near future. That's a catalyst that we like, right? So there isn't a strict criteria on price. We're just very careful sub $1. And liquidity is very important. So the less liquid a stock is, the smaller the position it's going to be. And with our fund, we actually have very favorable liquidity terms because we think that's important, that investors have some comfort in being able to get out if they want to get out, right? So the fund is full transparency. It's a separately managed account, and liquidity is very important. I would say it's a function of the price, right? So 25, 50,000 shares a day. I mean, we need daily activity. We need consistent activity.
Last question.
Sure.
I promise.
Not a problem.
Because I'm interested.
Yeah.
2015, what do you see?
I think it's going to be a stock picker's market again. The market's had a great, few years. We're watching two things. We're watching interest rates. As interest rates start to move higher again, it's inevitable. I mean, people were calling for this a year ago, right? There's no telling when it's going to happen, but when rates start going the other way, there's going to be a natural outflow from equities into fixed income. Now, that shouldn't really affect microcaps too much, but it's a headline to keep an eye on. So, interest rates, and then more recently, we were keeping a very close eye on commodity prices, because I think that energy prices and oil prices more specifically, we're going to get to a point where it's very favorable for the consumer, but maybe it's not so favorable for the energy complex. The United States right now is a lot of our growth and a lot of our production coming out of that space needs oil prices to be above a certain level. It's probably in that $70, $75 range. So these are things we're keeping an eye on. And we think we're not worried about the market at all. We're very bullish, and our portfolio reflects that today.
What's your background?
Sure. My background, I've been in the industry almost 15 years. I was an options trader out of college. I worked for a small firm and then for Goldman Sachs for a little while. I then spent some time as a derivative strategist in Philadelphia, as well as managed a family office portfolio for a number of years.
All right, now's the most important question of all. What's your website?
Sure, it's www.blueprintcapitalmanagement.com.
There you have it, ladies and gentlemen. Neil Cataldi, an expert in the micro-cap stock market, with a great wrap-up to the LD Micro Conference. Neil Cataldi, Blueprint Capital Management. I'm Shelly Craft. This is SNL Live. We're at the LD Micro main event in Bel Air, California, 2014. Neil, thanks for coming on to SNL Live.
Thank you.
You got
My
it.
pleasure.